Most small businesses don't have their accounting up to date at all times. And so if a bank tells me, log into QuickBooks, like sure, but that's going to be just as bad as if I pull up, statements because they're just not up to date. Every lender or bank has their own definition of what they deem qualified as income. And so we'll work with like a mortgage product that for them, it's very strictly what's on the tax return. For another bank, it could be way more flexible. It's like, we will look at payroll records, we'll look at any investing activities over time, and that will be our calculation, and that will then impact the debt service coverage. And so even simple, things that go in your spread, when you really think about how the application process is today with banks asking borrowers to self-report their information. Imagine how much context is missed when you're asking a borrower to tell you what their income is. They have a number and they've defined it as their truth, right? My income is X. That's how I've calculated it in my mind. The bank then has no way of tracing back how that calculation was done. Trusted customer data collection is not just about, is the borrower saying the truth when we talk about verification. It's also, is there a shared language of credit? Is the bank telling me, the income is calculated this exact way, this is how we need you to do it? That just doesn't happen on an application. It's the borrower self-reports, and the bank has to reverse engineer how that number came about, and then usually recalculate what that means. When you ask customers to log in to various accounts or just provide you with their tax return or provide you with the rawest form of information versus filling it out themselves, which is high friction, and the bank has to recalculate it anyway, so it's like a lose-lose. There is just more transparency and traceability and control over how it then gets utilized in the spread and then the debt service coverage and then impacts everything as a whole.